So you may not know this, but I actually began my career as a day trader as a New Year's resolution. This was the New Year's resolution that changed my life. So I'm going to talk to you about my decision to make that resolution and how I was able to stick with it even in the most difficult moments when I wanted to quit during this episode. I'm also going to share with you a recap from today's trades. I traded 4 stocks today. I came up just shy of my $5,000 daily goal, a green day, and I'm grateful for that, but it was a little slow. What was interesting today was my first trade was the biggest winner, second trade was the second biggest, third, and then my fourth trade was my smallest winner, and I was like, I am getting to a point where the next trade's probably going to be red. So I'm green on 4 out of 4 stocks. I'm calling it quits there, throwing in a towel, and I'm grateful to live another day. And when I'm thinking about a $5,000 daily goal, this really puts it in perspective. So let's time travel together. Let's go back 10 years. So let's go back 10 years. It's a little bit more than 10 years. So Great Recession, 2008, 2007, 2008. The stock market drops. We've got the financial crisis. At that time, I was living in New York City, and I had a job where I was working for an architectural firm. And it was a very interesting job, and I liked it a lot. But a lot of the projects that we were doing were projects that began long before the stock market crash. So we had a bunch of projects that were well into development, that, they were in construction. We were just doing sort of project management, and we weren't getting a lot of new projects coming in the door. Now, I sort of sensed the writing on the wall that this was not going to be good for the firm that I was working at. It was a small firm. And as an example, so we would occasionally hire interns at that firm. And one of my jobs was to just look at the resumes. And we would have people, this was in 2008 and 2009, applying for unpaid internships who had master's degrees. That's how bad the job market was. People were so desperate just to get their foot in the door. Now, I had a 4-year degree, which I was grateful for, but I already had my foot in the door with this company, and so I was working there, but I just knew the writing was on the wall that this job probably wasn't going to last. So I was spending a lot of time kind of going back and forth between my home state of Vermont and New York City, driving back and forth. And a lot of time I did it. I had a cat at the time, and with my girlfriend's cat. But the cat would go with us on this 3-hour car ride back and forth to the city. It was a nightmare. Anyways, so we're going back and forth a lot. When I would come up to Vermont, I felt like this is my home. Like, I'm home. I'm in Vermont. This is where I feel calm. I feel connected. I'm an outdoor person. I love doing things outdoors. I love doing projects, building things. And when I was in the city, living in this small apartment, I couldn't do any of that. And so my outlets that helped me kind of decompress, I didn't have them. And as a result of that, and just the way I'm naturally wired, living in the city built up this stress for me, where I got more and more and more stressed, more and more and more anxious, and it started bubbling over into actual physical panic attacks. And that was when I decided to quit that job in New York. And I said, you know what, I'm going to move back to Vermont, and I'm going to be in Vermont. And I knew that the job market in Vermont was even worse than the city, but I had some experience working at this architecture firm, and there was an architect up in Vermont that I had already been speaking to, and they wanted to have me help with some part-time work doing some project management. So I was like, this is great. I can, do a little part-time work for them. I can probably still do a little part-time work for the firm in New York City, and that'll sort of tide me over for a little bit while I sort of figure out what's next. Now, the problem was that for both of these firms that I was sort of doing part-time work for, work did slow down, and eventually it stopped completely. And so now I was in a place where I was like, okay, I need to be bringing money through the door. I need to either go get a regular job or figure something else out. And so something that's kind of interesting to me, I've always been a very anxious person. That's the way I'm wired. It's the way I was born. It's the way I've always been. It's the way I'll probably always be. And I think I've always been a very insecure person. That anxiety, I think, creates insecurity. Maybe it's the other way around. I don't know. But I've always been a very insecure and anxious person. And in fact, I think it's the combination of those two traits that have actually, plus a few other things, that have led me to where I am today. And so even though those are aspects of myself that I have a hard time liking at all, I actually need to love them, because without them, I wouldn't be here today. So what do I mean by that? Growing up in Vermont, I grew up with a sense of scarcity. A lot of people have a mindset of either abundance or scarcity. And I grew up with a mindset of scarcity, that I felt like we didn't have a lot. And I always felt that pressure, especially from my mom, that things were very tight. And, a penny saved is a dollar earned. Her grandfather, who raised her because her father wasn't around, he lost everything in the Great Depression in the 1930s. He lost everything. And he actually was working on the stock exchange on the day of the crash in 1929. And he lost everything. And he had to start over. And so he instilled this true sense of scarcity in my mother. And I think that this is actually a generational trauma. The loss that he experienced, it affected him so deeply that he ingrained that into his grandchildren, his children and his grandchildren. And then they in turn ingrained it into their children, me. And so I grew up with this sense of scarcity. And as I got a little bit older, I began feeling this fear of security, feeling that there was no security in whether or not I'll even be able to keep a roof over my head, or whether or not I'll be able to afford food. And as an example of this, I watched my mom. She worked for 40 years at a hospital in Vermont, and then got laid off. And I learned that I interpreted that to mean that there is no such thing as job security. That you need to find your own way to build your career and to generate wealth, that you can't depend on working for somebody else. Now, I think my sister interpreted all of this a little bit differently. My sister she graduated from college. She did a sort of traditional college experience, got a job working at a hospital, working at a medical center, working at a dentist, and then working at a hospital. And she's sort of found security and a sense of financial security by doing everything really by the book. She's got the 4-year degree. She got the job. She moved her way up the ladder. And she has the security of that 9-to-5 job. She has the security of the 401k and all the things that come with it. I think for me, the combination of being anxious and seeing what happened to my mom led me to be unable to believe that a 9-to-5 job is actually true job security and not just an illusion of security. And so for me, what I felt was that I needed to find a way to create my own income. And so when I was living up in Vermont, I started looking for ways I could start my own business and essentially be self-employed, but I would be generating money from this business. And I was trying to think of different businesses that I could create. Now, one of the challenges was I didn't have a lot of startup capital. I certainly wasn't eligible to get any loans because I wasn't employed. Self-employed isn't good enough to get a loan. And so I was sort of struggling with figuring out what I could do to sort of jumpstart a business. And one of the things that I was good at, because I've been introverted and sort of that type of person, I became very good with a computer at a fairly young age. And so one of the things that I started looking into were ways that I could make money online. And one of those ways, obviously, has been trading. There were other things I tried first, though. There were drop shipping websites. You'd create a drop shipping website and you'd ship stuff out. And I tried that. There's affiliate marketing. I tried that. There were some other things that I tried. But the problem was, in those days, I didn't have any I wasn't a social media influencer. I didn't have any followers. Affiliate marketing works when you create great content that people check out, but I wasn't able to do any of that. Day trading felt different, though, because day trading felt like something that was really within my control. It's me versus the market. So, it's not, I don't need to go find customers. It's not a landscaping business where, I have to deal with, someone's not happy with how I mowed their lawn. I tore up, I ran over something or whatever. It's just me versus the market. And I liked that. And the market doesn't care. So it's sort of an even playing field there. It doesn't care about your education. It doesn't care about your religion, your race. It doesn't care about how you look. It doesn't care about how anxious you are. It's just how you perform every day. So I perhaps naively thought that I'd be able to figure it out. And the reason that day trading even came into my mind as a possibility was for a few different reasons. When I was in probably fifth grade, maybe sixth grade, somewhere around there, maybe it was even fourth grade, I learned about a family member. My great-grandfather lost, my mother's grandfather, he lost all his money in the Great Depression, and he had to start over. But his brother-in-law, he started an investment company in following the Great Depression, and he made millions of dollars. And this was way back then. He was incredibly wealthy, incredibly successful. And so there's these two branches of the family tree. One that has, they're so close together, but one that has, the real trauma and the FOMO of missing and the loss of the stock market. And you can't trust the market, and a penny saved is a dollar earned, and you never know when the next depression is going to come. And then the other branch that had all this wealth and prosperity from the same market, two different approaches. And so I think when I learned about that, I was inspired by, the fact that this was a branch of the family tree that did not deal with this anxiety of scarcity, that had abundance. That was interesting. I was very interested in that. Then in my middle school years, the school that I went to, because it was in the late 90s, did a semester on the stock market, teaching us how to actually begin investing. And we had dummy accounts set up and my partner was named Cooper. He lived just a couple streets over from me in town in Vermont. And he and I had this account that we set up, and we were all paired up, and we were buying these different companies. And it was a dot-com bubble. I mean, everything was going up. And so that was really inspiring. As part of that semester, we did a trip down to New York City, and it was very powerful. So some of you already know this. So what I decided to do during that semester, it was winter time, and I was an avid skier. I'm from Vermont, so of course I know how to ski. And I thought I should invest in the American Ski Company, because it's a publicly traded stock, publicly traded company, and they own some ski areas in Vermont. And it was only trading at like 95 cents. It's probably bankrupt now because it's not, anyways. But nonetheless, I wanted to invest. I wanted to make my first investment with my hard-earned money, $100. So I went to my local Edward Jones office with $100, and I said, I want to buy, 100 shares, I guess, of American Ski Company. And they said, oh, shoot. Well, we charge a $50 commission to buy and another $50 commission to sell. So come back when you have some more money. And I thought, oh, shoot, darn it. Okay. So that was it for me. I was, I don't know, probably 12, 13 years old. I was interested in the market, but I couldn't, I was limited by those factors. Someone today wouldn't have those same limitations with Robinhood. You could just go ahead and start getting that experience, which is amazing. But it wasn't the case for me then. So a couple years later in high school, I funded my first Ameritrade account. It was before they merged with TD. So it was just Ameritrade, and I funded my first account with about $1,000 this time. And this was money I'd made from mowing lawns and, doing odd jobs and things like that. So I funded this account with $1,000, and this time, this was after, the dot-com bubble. So at this time, I was looking at companies. I wasn't day trading. I was fancying myself as maybe I'd become an investor. I'd be buying shares of stocks that, I thought were going to go up over time. But I had unrealistic expectations. With $1,000, I put my money into these companies that I was familiar with: Caterpillar, ExxonMobil, US Steel, Pfizer, maybe Johnson & Johnson, a few others. But by the end of the summer, the account was more or less unchanged. So I took the $1,000 out, maybe 1,100, whatever it was, and I bought a 1990 Volvo station wagon, a 240, with 245,000 miles on it. I owned that car for probably 5-6 years, and ended up selling it for about $1,700 at the end, because those cars, I mean, they don't really lose value, and I added a new stereo system. Anyways, that was a good investment. As it turned out, you wouldn't expect it to be. It also got hit in the parking lot of a movie theater, and So I got an insurance settlement out of that for like $1,500 also. So all in all, that car was a great ROI. I'm on a tangent. Okay, so let's bring it back. Okay. All right. So that was my second experience trading. Didn't really go anywhere. I go through the rest of high school. And during high school, I had a friend who made $16,000 trading a penny stock. That was inspiring. So anyways, I do my college stuff. I'm not in the market. I didn't have the money. I just didn't, I didn't know anyone who was actually doing it. My one friend had that one trade, but that was it. It was a lucky trade. And I wasn't surrounded by people talking about this. You know, this was probably before YouTube was even invented. So, you know, I was isolated. I didn't know. I'm sure there were people trading and there was stuff happening, but I just didn't know about it. So then I'm basically completely out of the market from 2001 and then 2002 roughly until I came back in sort of during this great recession. And it's the Great Recession. I'm now back up in Vermont. And I thought to myself, all right, well, my friend Ben made some $16,000 trading a penny stock when we were in high school. If I could do that twice a year, 3 times a year, $45,000, that would be incredible. I mean, I'd be making a lot more than I would make if I go get a job at the ski area or if I work down at the deli, one of these, at the restaurant. So now the thing is, my friends were all working these shifts where they were up really, really late at night. So I was not a morning person in these years. So part of my New Year's resolution was setting the alarm on my phone just to actually wake up so I could watch the market open at 9:30. Because I wasn't waking up at 9:30. I was staying up to 2, 3, 4 in the morning, and I was sleeping till 11 or 12, which was the same as most of my friends who were working at the restaurants were doing. I was on the same schedule as them. So I made this commitment that I was going to change my schedule, and that by itself was hard. And I remember those first few days pulling myself out of bed. I was like, this is so stupid. Why am I doing this? Probably the same as someone who sets a New Year's resolution to exercise every day, and you're like, oh my God, why am I doing this? I see no results. It's been day 2. I'm exhausted. This is stupid. But I kept with it. And what I started doing was I would sit down each morning and I would pull up some websites. So I would pull up Yahoo Finance. Yahoo Finance. I'd look at Yahoo Finance. They have those message boards there. People would be talking about different stocks. I would Google search. I would search for penny stocks. My friend Ben had made money on penny stocks, so I was searching for penny stocks. And I was seeing all of these different, websites, and they'd all say, enter your email address here. We'll send you the next penny stock alert. So I subscribed to like 100 of those. Not really 100, but probably a dozen. And I started getting all these emails for penny stock alerts. But this was good because I was able to start looking at stock charts. I was able to start kind of getting oriented with what's moving. What are people talking about? And unfortunately, so I had a little bit of beginner's luck. One of my first trades, I made like $300, and I was blown away. I was like, I just made $300 in like 5 minutes. That was incredible. That's more than I would have made at a full week of working one of these minimum wage jobs. Whoa, this is real. There's some serious potential here. But no sooner had I made it did I lose it. The thing is, I wasn't worried about the losing. The fact that I had been able to prove the proof of concept of how quickly that money could be made, that's what kind of motivated me, that I was like, I have to figure this out. Now I know that it's real. I've gotten a taste, and I've got to figure this out. And at this point, I was like, it's just a matter of creating a set of rules and a strategy and a system that I'm going to follow. I need a system. I don't have a system yet. I need a system. And I started trying to look for a system. And I spent all my time studying charts and looking at these different websites and watching videos. And there were courses out there, but unfortunately, I felt very cynical and skeptical about a lot of them. I was like, I don't know. If this person is really a successful trader, why do they have this course? And so I try to find out, are they really a successful trader? What's their trading history? Is this all just like an illusion? What's their actual trading history? And for a lot of these guys, there's no broker statements. There is no trading history. There's nothing, which is why it's so important that I put transparency at the forefront and put all of those on our website for those of you guys who look at my stuff in that same way. You're like, Ross, if you're really so successful, why do you teach? And I can answer that in a second, because the way I learned was intertwined as teaching and trading. But for those of you that are just curious about my own results, I put them on the website because that's what I was looking at in other traders. I was saying, what is their performance? What's their track record? What's their consistency? If I'm going to spend the time learning their purported strategy that works, show me that it actually works for them. And I didn't find that. So I was probably a more critical buyer than other people out there when it came to looking for a trading course or something like that. And as a result, I didn't buy those courses. And then I was stuck with trying to kind of reinvent the wheel, figure it all out myself. And that took me over the next 2 years. 2 years of trial and error, of making money and then losing money, making money and then losing money. So my equity curve during those 2 years, it actually looked, it wasn't terrible. The first year I made about 30 grand. It was not bad. I had some losses. The second year, I lost about 30 grand. Now that wasn't so great. The problem here was that although I guess I was more or less zero, I was up 30 then down 30, during 2 years, I had been taking money out of my account. So my account balance, when I was making the 30 grand, I made the 30 grand, but my balance was the same because I was taking money out each month. So then when I started losing money here, well, I couldn't take much more money out of my account because I would go below the minimum account size. So what I ended up doing was basically keeping my account the same, but incurring credit card debt. So I incurred $30,000 of credit card debt during my second year of trading. Right? So now all of a sudden I've got this credit card debt going up. My account's still here, and I actually had to make a decision. Should I liquidate my account, pay off my credit card debt, and just say, that was 2 years lost. I screwed up. You know, it's not going to happen for me. And I was very close to making that call. What I ended up deciding was, and I made that, this call that I made, I had a day where I had dropped, even despite this, I had taken a $5,000 loss. So now my account I was locked out unless I add more money to it. So I had 25K in the account. Now I had 20 left. So, you know, I was like, do I take the 20 out, pay off the credit card debt? But that wouldn't even pay off all of it. Or what do I do? How do I get myself back up to 25K? You know, I'm cute, but we didn't have OnlyFans back then. So, you know, I didn't have a lot of options. I ended up pulling all my metrics from the previous 2 years of trading, and I started analyzing them. I was going through those metrics, and I'll pull up my screen share here just for a second, and I'll actually put the metrics on the screen for you. Well, they're not the same metrics I was looking at in those days, but I'll show you what I was looking at essentially. I'll log into my metrics so you can see. So I sat down, and this was with Excel. This wasn't with any fancy software. This was just with Excel, and I was using, let's see, just some sheets. So I was sort of printing stuff out. All right, so what I ended up doing was I took my metrics and I went into essentially starting to filter them. And I was asking myself, okay, what day of the week do I make the most money? And, you know, I was tracking my trades in this Excel doc by day of the week, by time of day, by price. So it was what day of the week am I making the most money? What time of day am I making the most money? What price stock am I making the most money on? And doing this was really a helpful exercise for me because, you know, if you look at these metrics right now and you said, well, if it makes sense for me to really focus on one specific area, what would it be? Well, probably like this area here. Clearly that's where I do the best. So like, you know, probably that area is the place. Under $2, you know, it's not, yeah, that's over many years of trading, but just as a ratio, this is a tiny amount. Like it's not contributing. So the thing is, any attention focused on this is an opportunity cost from focusing on one of these. So this helped me, looking at all these metrics, helped me get dialed in. And with that, I sort of had a renewed commitment that, okay, I am going to fund my account back up one more time. And this time I'm going to follow a set of rules. It's a system that I'm going to follow. I'm going to follow it systematically. I'm not going to be, I'm going to try to take my emotion out of my trading because I'm just going to follow a set of rules. These rules dictate the price stock I buy, the setups that I buy, when I get in, where I get in, when I get out, where I get out, what time of day I walk away, no matter what. And all I have to do is follow that. And, you know, that worked for me. But it took me years to develop that system myself. So as I was developing this system, I was documenting the system that I was creating. I was doing a lot of blog posts about it because, as I had mentioned, I was really good with a computer. I had one of my first businesses that I made was with a friend. We were in high school and we created a web design business, and we were building websites for local companies, a couple nonprofits and a couple of for-profit companies. So I learned how to code in HTML. I learned how to use Photoshop. I learned how to use Dreamweaver and some of these different platforms that you can use to build websites and make them really nice. And so then, you know, when WordPress came around, it was like, whoa, this is amazing. Just new post and fill it out. So what I started doing with Warrior Trading was creating what I thought would be essentially like almost a personal database or library or like Wikipedia type of thing of my trading and the setups that worked and the patterns I liked, the patterns I didn't. And it was a way of me organizing my thoughts. Now, this was something I was doing for me, but as it turned out, because of course WordPress sites are searchable, the site started getting traffic and people started coming and visiting it. And I was getting comments, I was getting engagement, people were asking me questions. I was answering those questions. And then in 2014, I created a chat room at Warrior Trading. I was like, you know what? I'm going to create a chat room, a community, so I can talk with other people who are as passionate about this as I am. And then in 2015, no, so I'm sorry, it was 2014, I taught the first version of my day trading course. 2015 was when I wrote How to Day Trade, the book, my first book. And at that point, I began teaching pretty much like every couple months. I was teaching these live classes and I was trading every single day. And I realized that being a teacher made me a better trader because it forced me to articulate exactly what I was doing, which helped me better recognize what was happening, the patterns that were right in front of me. That reflection was really important. And it also helped hold me accountable. Because when I was making mistakes, I was right there in front of everyone, sharing them with everyone. This was a mistake I made. Shoot, wow, that was not a good trade. And so my teaching and my trading have become kind of like one. Like I do them together every day. I sit down to trade, and I also open up the chat room, and I've got this wonderful community that we've built over the years. And someone asked me the other day, said, Ross, you know, you've made all this money trading. You've made over $10 million trading. What's the point? Why do you keep teaching? Why do it? I'm a third generation teacher. So my mother was in the school system. My father was not in the school system, but my mother was. My uncle was in the school system. My grandmother on both my mother and father's side were both teachers. And I think that there is something, maybe it's in the schooling that I went to, where, you know, the older kids teach the younger kids, but I really enjoy teaching. And for me, for someone who's insecure, having something that you know, that you can teach someone else about and show them how to do it, there's a real feeling of confidence that comes with that. Like, wow, this person wants to learn something from me. And I even see it in my own children. My son, who's 5, teaching his little brother, who's 3, how to do things. And it's like, good for you. And now I'm like, how can I give my youngest son the opportunity to have those same experiences? Well, he's got younger cousins and things like that, so he will. But that teaching, finding something that you can be good at and then helping other people learn it is an incredibly fulfilling experience. And I love the community that we've created. And it's also given me the opportunity to build these incredible tools, our scanners, our charts, the chat room, everything else. These are tools that I use in my own trading, but of course, many of our members use them too. And then, of course, seeing students who have gone on to achieve incredible success. Although, as always, results are not typical. Those who have done well and who come to me and they say, Ross, you changed my life. I feel like I changed my life. I set this New Year's resolution. I had to figure all these things out on my own. I didn't have a lot of help from other people, aside from some of the things that happened earlier in my life that sort of guided me. So if I can be the person out there putting out this type of content that helps you make better decisions, that helps you become more financially literate, that helps you achieve any degree of independence financially in trading or otherwise, that's awesome. I love that. So for me, it really does give me purpose. And so that's the why. That's the why I keep doing it. And I keep trading and I keep teaching. And I don't really, to me, it's like, why would I stop? Why would I stop? I mean, of course I wouldn't stop trading. Why would I stop trading? That'd be silly. But then same with teaching. Why would I stop teaching? Why? I mean, I'm going to trade anyways. So why not, And so now, more than a decade later, I look back at that moment where I said, I'm going to start waking up early every day. And I'm going to force myself to do it even though I don't really want to. And I'm going to force myself just to keep studying, keep learning. And I'm going to spend an hour or 2 hours a day just continuing to absorb, because this is a marathon. It's not a sprint. So it's about incremental progress. You watching this episode right now is a little bit more incremental progress. And maybe watching this episode right here isn't going to be the thing that, flicks the switch for you or whatever. But it's the culmination of all of these little things that they sort of, as all of these little pieces of information come in, I don't know what the word is, but they just sometimes have to simmer on the back burner until it's like, whoa, the pieces are now falling into place and it makes sense. I'm getting this. And it was that thing he said in that video. And it was this thing I saw over here. And okay. So, and for what it's worth, since I turned the corner, I've been trading virtually the same strategy for all these years. Yeah, I'm a little more aggressive sometimes. I've made more some years. I've made less other years. There's things that I can't control, what's going on in the market. But more or less, I've traded the same strategy for all these years. And the system that I trade is the same system. I teach it in my classes. It's being traded by thousands and thousands of traders all around the world. Because the strategy that I trade, it's not like it's proprietary exactly. It's my strategy. But as a day trader, you really are doing like one of two things. You're either trading momentum or you're trading counter trend. I'm a momentum trader. So people have been momentum trading for forever, right? So that's just trading with the trend. And people have been doing it for 100 years in one way or another. So I just have my sort of variation on it. But I think what people really enjoy about me, if I was to say, is the way I'm able to articulate my trading and explain something that is fairly complex in a way that's simple. So I kind of have gotten a good sense of, as I'm teaching something, when to hold back pieces that are complicated and overwhelming and not necessary, when to focus on just the core element that you need to understand for this step in your journey. If you could just master this, you're good. And then we'll get to here, to here, to here. And eventually we'll fill in all the details. But rather than, it's like, I don't know if you ever watched someone do a painting, but rather than doing like a perfect drawing of an eyeball and then the rest of the painting is a white canvas, it's like sketching it out and then layering in the detail. That's the way I teach. And I think that that's the way a lot of people learn. So let me give you a little example. Let's look at today's trades. Today, we're in a period right now where we're seeing some volatility. We saw some opportunity. I finished the day up $3,000, which is pretty good. A little shy of my daily goal, but a good day nonetheless. FWBI, this was a big move this morning. We had two really big moves on it, and I kind of fumbled them. So I'll show you what happened on this one. This right now is fading. This is a fade off VWAP. Actually, it's going all the way to a halt down. Golly, 10,000 12,000 on the ask, 13, 14. Oof. All right, so that's halting down. 18. The stack is getting bigger right there. So this is one of these little pieces of detail, that sort of nuance. So when I see a stock going into a halt, you've got the bid, you've got the ask, and then you see that ask number going from 12 and then going to 13 and then going to 14 and then going to 18. The order is getting bigger. More people are selling. So it's going to definitely halt down. When it goes smaller, it goes 12 and then it's like 8 and then it's like 6. Well, then people are buying and it actually might do a false halt and pop back up. All right, so nonetheless, halted down, showing a resumption lower right now at 804 projected. Okay, so I'll put that back over there. Anyways, so I'll start with, let's go back to NKGN. All right, so NKGN, this one pops up on the scanner, had some news. It was right at 8 a.m., top of the hour, boom. The stock goes from $3.30 all the way up to almost $5 a share. That is a big move. However, what I will tell you is that I traded it cautiously with small size, and I didn't go back in because look at the volume profile. This is a very unattractive volume profile right here. Light volume on the move up, and I got in this in the move up, and then it peaks up here and has high volume selling off. So I got in this, basically what happened on this one, it's actually not a bad chart if we look at the 10-second. The 1 minute is not as attractive. The 10-second time frame I was using on this trade. So I always have the 10-second chart up, and this is what I saw. So this is my workflow. All right, so the stock pops up and hits my scan. So it goes ding ding, and my dog with the black ears, he like looks up and he's like, oh God, that large man's not gonna come trampling across the room, is he? Because he's like a little nervous. But I'm already sitting here, so ding ding. So I click the ticker, the chart starts loading. While the chart's loading, I'm coming down to my level 2 window and I'm typing in the level 2. So GDTC. And then the level 2's up. The first thing I'm looking at is the spread. Now I'm glancing at the chart. The spread here, just for instance, okay, we got like about a 30-cent spread. The chart's 550. So now I might be thinking, okay, do we have breaking news? Where do I check that? Right here, news headline. So I'd say, okay, do we have breaking news today? What's the date? No, that's not fresh news today. All right, now if we had fresh news that just came out in the last 2 minutes, I might be like, okay, I think I'm going to be a buyer on this, as soon as this thing breaks over that level. And then I'm already getting my order ready for that breakout. I'm just going to move this up a little bit. So in that case, I'd be like, okay, I'm putting the order at 551, and all I have to do is click this buy button right here, and I'm going to send the order right to the market. I don't change the market route. I don't change this. None of this changes. And sometimes I'll change the share size based on comfort. The spread right now in this one is too big, but nonetheless, this is what happened this morning. So NKGN hits my scans. So NKGN. So I typed it in. I saw, okay, we've got news on it. Then I'm typing in the level 2 here, NKGN, and I'm looking for an entry. I saw that it was at about $3.80. So it's at 380. I'm like, okay, 380, that's close to 4. I then look at the chart, the 10-second chart, and I realize it already hit 4. And I'm like, ooh, okay, it hit 4, and now it's pulled back off of 4. Let me just back this out. Okay, so I'm like, okay, it's, I gotta double click it. There we go. All right, so it's hit 4, and that was right here, and then it pulled back. Now, it held right here. It held for about a minute, and I thought, okay, well, 30 seconds. So I was like, okay, I think I like this for a long right here over 380. So I went ahead and punched it, and I got filled at 383, 394, 399, and it pops up here to 433. And I'm like, okay, 30 cents a share. And then it dips right here, and I add another 2,000 shares at 418 and 419. It pops up here to a high of 443. I'm like, very nice. I add another 1,000 shares at 442. So it's going up a little bit higher. Now I took a little profit off the table. It hits a high of 462. It pulls back. It goes up here to a high of 479. It then sells off all the way down here. I bought 1,000 shares at 4 and caught this bounce back up. But my initial starter wasn't very big, and I did take profit on the early side on it. And then as I'm looking at the 1 minute chart, I'm realizing that the volume profile is looking pretty bad. We've got high volume selling. So we had light volume green candles, high volume red candles. And I'm thinking, no, this isn't good. And ended up retracing most of the move, which was kind of disappointing. As I've talked about, I trade stocks that are moving. So at this moment, the stock was moving. I was interested. So that was my first trade of the day. All right, so NKGN. The next trade was FWBI. FWBI. Now this made an impressive move. And again, it's come back down. So, there's volatility here. Volatility equals opportunity. What was interesting on FWBI was that on this one, we had this long period here, a pop up, a pullback, a pop back up, and I took my first trade right in here. Okay, it's a small winner. It goes up to here. It was like $300. It dips down, and then I got back in right here, but I was sort of nervous because it had rejected right up here before, and it also kind of had a nasty rejection on that candle there, and I was like, I don't know. And we had just seen these other rejections, so I ended up getting in, and then I was like, gosh, I don't know if I want to chase it up here. It breaks 925 and goes to 10, 11 to $12. That was fast. Now, up here, I tried to do a dip, which was super risky. I stopped out of that, lost like $700 on it. It sells off. It comes back up. I got back in up here as it comes back through the high and made a little bit here. At the open, I got a nice dip at 13, and the high a day was 1430 or 1450. So I got some nice trades on it. But all in all, I really didn't make that much. And I gave back 1,000 or so of what I had made. I was up 3,700 at my peak today, and then I gave back 700. So, and that was on FWBI. So that was, so it was, we had some good momentum on it, but it was a little touchy, a little touch and go there for a few minutes. It was a little difficult. And then we had, let's see. So next one was NXU. NXU did a pop-up pre-market, dips down, and then pops up. And then there was a little dip and rip opportunity in here. But honestly, it was nothing exciting. I really didn't feel confident on it. I didn't like it. So very small winner, was in and out. And then there was CING. CING was strong this morning pre-market with FWBI. But although we had this nice move, I tried one dip trade here for the break over 5. And it was a close call, and I got out of that with $40. And at that point, I was like, you know what? I think this is good. I think I'm done. I'm not really feeling it anymore. And it's noontime now. The market's still going to be open for 4 more hours, regular trading hours, but I don't really feel like I've missed anything at this point. CYTK has been grinding higher price. It's not great for traders with smaller accounts. LIDR made a little bit of a move this morning. Yeah, I saw some traders. There were definitely some traders that did far better than I did today, even in our own community. FWBI, this gave some great opportunities, but now, another halt back down. So now showing a 615 resumption. Okay. So 1155. Yep. So you've got news there. All right. So announces exercise of warrants and issue of new warrants. Private placement, $4.8 million. Gross proceeds at $5.50 a share. Yep. So, the funny thing on this is a thing that I'll say is kind of funny. The stock has 20 million shares of volume today. So has entered into agreements with certain holders of existing warrants exercisable for 800,000 shares. So they sold 800,000 shares. Looks like, the aggregate gross proceeds from the exercise is approximately 4.8 million before blah, 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 blah. But, it's kind of funny because in terms of the relative, I'll look at this. In consideration of immediate exercise, the payment of 12.5 cents per share underlying for the new warrants. Wow. $5 here again. Yeah. This is tough. It dilutes the value of the company. It's tough. But sometimes direct offerings can be a little bit better when they're actually selling shares right into the market, because then the price action can absorb the selling a little bit better. And then it's like, well, when they announce it, it's already over. It's already done. The shares have already been sold. So any market impact is, it's already happened. Now you just have the news around it and, the price of what they sold at. But if they were selling it at the market, then the price isn't as bad. But this is a price down to like $5. This is something we see a lot with these biotech stocks. So the thing that I say is don't overstay your welcome. Get in, get green, and get out. The reality with a lot of these pharmaceutical companies, it's clinical stage pharmaceutical company, they need to raise money. They need to raise money from investors in order to put that money back into research and development. That's what they have to do. That's why they're publicly traded, so they can get that money. And if this company is able to come up with some really amazing, treatments, drugs, or whatever the case is, then it's like a lottery ticket for them. That's all they need is one. But in the meantime, they need to keep raising money. And so when we're trading them, we're always sort of speculating on, did this one have the lottery ticket? And when the price goes up 100, 200, 300, 400, 500%, yeah, that seems like they got the lottery ticket. Now the stock price is reflecting it. But then into that move, either, the company will become a buyout candidate. They have a license agreement that's giving them cash flow, or it's good news, but it's still too early, and they do need to raise more money just to keep up with cash flow. And so when they raise more money, they do that through an offering, and then that's that. So LIDR, right? So this was another one that was on the scans this morning. So we had a number of stocks that were moving today, but it sort of felt to me after FWBI started selling off that this was going to be difficult. And actually so note this, I actually said, I think there's a chance that we're going to see a big red candle like this. And here's the reason why. Let's look at the chart. Same thing happened back in September. So I said, I think that the action probably on this is going to be pre-market and we're going to sell off. And it's almost the exact same. So this was predictable to a certain extent. Now you could say, if it's so predictable, you could trade to the short side. Well, let's not forget, shorting a low float biotech stock that is already up 150%. These ones can go crazy. You could come back and it could be the one that's at $25, $35, $40, $50 a share. And in any case, I trade in a retirement account. So my trading profit is tax-free, which is fantastic. But I cannot short stocks. So that is a rule with retirement accounts. You can't short stocks. Anyway, so green day nonetheless. And for those of you guys who are out there thinking about taking the leap and wanting to learn more about trading, obviously the best time to have started was a year ago. The next best time is now. So I thank you for watching this episode. Keep absorbing all this content, the knowledge, and the process of converting that knowledge into skill. It takes time. It takes practice. You got to practice. And you should do it in a simulator where you're protecting yourself from drawdown. I didn't follow that advice. For me, I put real money in the market, and well, it made it for a very stressful 2 years where I had a lot of points where I was ready to throw in the towel and give up, and I almost didn't make it. But I think for me, my drive came from the fear. It was the fear that motivated me. The fear of what would happen if I did not figure this out financially, how much I had vested in it. And so that fear became a really strong motivator. The fear of insecurity or financial insecurity, financial instability, the fear of scarcity. Nothing is going to move a chipmunk harder than the coming winter. And so, it's just that feeling that you have to put that away. That's a very strong motivator for a lot of people. It's the carrot or the stick type of thing. And for me, I was not motivated by trying to make enough money to buy a fancy car. No, that carrot, that does nothing for me. The motivation came from the other side of the fear. That's what has kept me running. You see people running. Whenever I see someone running in the morning at like 5:30, they're jogging. I'm like, what are you running from? For me though, that is an incredible motivator. So anyways, thank you guys for tuning into this long episode. I hope you will consider making some type of commitment to yourself that, this is what I'm going to do. This is how many hours a week I'm going to do it. This is how many days a week. I'm just going to, I'm going to make a commitment, and I'm going to try to stick through with it and see where I am 3 months from now. I bet you'll have a lot more knowledge than you do today if you make that commitment. Okay, so thanks for tuning in as always. Reminder, trading is risky. My results are not typical. Manage your risk, practice in a simulator, and don't try to blindly follow me or anyone else. Don't go for trade alerts. Don't look for people that are going to send you text messages or WhatsApp or the WhatsApp messages. Those, most of them, scams. Stay away from that stuff, all right? It's you versus the market. Don't give your money to anyone else. You trade it yourself and see if you can master a strategy. But practice in a simulator first. All right, if you enjoyed this episode, here's another one YouTube thinks you're going to love, and I'll see you for my next upload tomorrow morning.